Hello everybody, this is Sunny Panu on our Minorum Gold YouTube channel. Thanks for joining us, and today we have another special guest, Mr. Bhagyesh Dash of Bromius Capital. He's one of the founders, which is an investment advisory group based in Singapore, specializing in the mining and metals and as well as the upstream oil and gas sectors. Bhagyesh, thanks for joining me today.
Morning, Sunny. Thank you. It's a pleasure to be with you today.
Excellent. So today's topic, we want to talk about the Asian economy. Is it still strong enough to sustain gold purchases? Now, your specialty is obviously you're based there. You follow the Asian market more closely than anybody else that I know. Of late, the Chinese stock market has had a significant correction to the downside, and the Chinese economy is slowing. So, what is your analysis on both fronts?
Sunny, look, it's a good question, very relevant, obviously. But the way I would answer it is that there's always a base inherent demand from Asian investors, as you know, particularly Indians and Chinese, who historically have been buying gold and using gold as a store of value for hundreds and thousands of years. So I think that demand is not going to disappear. The question is whether the recent devaluation of the renminbi and the impact it's had on other currencies in Asia, leading to their depreciation, is going to make gold more expensive for Asian buyers. But again, I think, I believe that the base demand will stay fairly healthy and strong from the Indians and the Chinese. Is it going to increase from an investment perspective? I don't believe so, because I do believe that in the last year or two, there's been a loss of faith in gold as an investment product. But from a jewelry demand perspective, I believe demand should continue to stay where it is, at least, or have a slight growth anyway.
In terms of the yuan, I mean, you kind of touched on that. China recently adjusted their yuan peg to the dollar. First of all, why would they do that? And what are the implications? Because what we've seen on top of that is the interest rate, of which they've adjusted 25 basis points to the downside. The one-year lending rate has gone down to 4.6%. The one-year deposit rate to 1.75%. And they also adjusted the reserve requirement ratio to 18%, as well as pumping in $110 billion US to 14 institutions at a rate of 3.35%. What are the implications of all these tools and policies being implemented?
Look, I think you mentioned a few things that the Chinese have done, and taking a step back, why have they devalued the yuan? And I think there's a number of popular theories out there, but I think the one that probably holds the most credence is that the Chinese government is trying to have the yuan included in the basket of reserve currencies that the IMF has. And actually, a couple of weeks ago, the IMF announced that it's going to be a year before they start considering the Chinese currency. But I think what they're trying to do is make the currency more free-floating, more driven by market forces, and that is certainly one of the criteria for the IMF to consider the yuan as for its basket of reserve currencies.
Right. And that's the special drawing right, correct?
Sorry?
That's the special drawing right?
Correct.
Yes. Okay.
So the IMF has its own sort of criteria before it selects currencies. Now, bear in mind that the last time they included a new currency into their basket was at the time of the euro's introduction. So it's not something that happens on a regular basis.
Right.
But indeed, there is a case that the Chinese are trying to make that the yuan should be in the basket of currencies, because clearly they're trying to move away from being from just being driven by the US dollar. They do a lot of trading in Asia, and they would like the yuan to be the currency of choice. And for that to be the currency of choice, one of the tools is to have it included in the IMF's basket of reserve currencies. In terms of reduction in interest rates and what they've done with the reserve ratios, I think it's pretty clear that what they're trying to do is, again, try and fuel domestic demand. What happened back in 2008, where during the global financial crisis, is the Chinese stepped in And once again, they loosened the purse strings, but they loosened it from an investment perspective, from a state investment perspective. So a lot of the growth that we've seen in China in the last 6-7 years has been credit fuel investment by the state.
Interesting. Yeah.
Questionable whether a lot of that was productive investment. And again, I think popular opinion would suggest that a lot of it was perhaps not productive, which is why now the Chinese economy is in a bit of trouble. And what they're trying to do now is trying to fuel growth in GDP through domestic demand as opposed to through state and public investments. And obviously one of the tools of doing that is by reducing interest rates, making it cheaper for people to borrow, and making it easier for banks to lend as well.
Right. Interesting. It's very important that you actually pointed that out, that in 2008, everybody is pointing the finger at the U.S. in terms of quantitative easing programs, but there were many other countries that have been part of those programs, and China is a prime example for several years. Now, you already answered the question on Asia being, continuing to be buyers of gold. What are the risks and uncertainties that you see for the Asian economy going into 2016, based on the last few months here?
Look, with Chinese demand faltering, a lot of the Asian economies, they consider China to be their export market, particularly Japan, which has become increasingly reliant on China as the end market for a lot of their products. In fact, it's as important to Japan as it is as US is to Japan.
Right.
And a 1% drop in demand in China, by some estimates, will result in a 0.1% drop in GDP for Japan. So and then you've got other countries like Korea, Indonesia, who will also be impacted in a similar way by any sort of faltering in demand on the Chinese side. Now, with the Chinese renminbi being, or the yuan being devalued, that's also led to a depreciation in some of the Asian currencies. So what you're going to have is, you're possibly looking at their exports becoming less competitive to other markets vis-a-vis Chinese exports. So you're going to certainly have a period of volatility in the currencies of some of in some, if not all of the Asian currencies. And that's going to lead to more uncertainty in terms of GDP and economic activity. How their exports stack up in competitive terms. Whether the Chinese depreciation leads to an export of devaluation, certainly to places like Japan, which is trying to reinflate its economy. So I would, in a nutshell, suggest that it's going to mean more volatility for currencies and more uncertainty.
I guess, what is your overall outlook going forward?
My overall outlook is that it's going to be a fairly volatile period for Asian economies, because anytime there is stress in the global financial markets, the emerging markets, be it in Asia, Latin America, Asia, Central Europe, they tend to be impacted the most because there's a flight to safety away from the riskier emerging currencies. And once your currency starts to wobble, that leads to a number of ramifications through the economy. So, with the Chinese, one never knows exactly what type of policy movements they're going to make.
Right.
It's not like the Fed, which signals every quarter what they're likely to do and gives the market a good idea.
Right. There's some level of expectation with North America, but with the Asian policymakers there in China, it's very irregular.
It's a black hole, right?
Yeah.
So you never really know what they're going to do and why they're going to do it.
Right.
And so therefore, I think it's just going to be a period of uncertainty in 2016, and the main challenge for the Asian economies is to make sure that the currencies don't depreciate so much that it leads to stress in terms of servicing debt. And also resulting in their exports becoming less competitive vis-a-vis the Chinese.
Right. Interesting. Well, just to end off on the last question here, being a specialized mining and metal shop, natural resources including oil and gas, with your clients, how do you steer your group in a financial climate like this? How are you making yourself successful here?
I think very good question, very hard question to answer. Unfortunately, given that our mandate is mining and oil and gas and resources, we don't have much room to maneuver, Sunny, in terms of how we go about things. But I think, again, having been in the sector for 20 odd years, a couple of things come back to, a couple of things that you can lean on. One is focusing on projects with good management, good people. I think it doesn't matter which sector you are in. I think having good people, good character, that's always important. And two is trying to focus on best-in-class projects in terms of cost and grade, and try and stay in politically safe jurisdictions. And that's where places like Australia and Canada are standing out now. I mean, we are working on a few projects, and it's very clear that investor interest, albeit far less compared to what it was a couple of years ago. If you want to generate investor interest, if you want to steer capital anywhere, it is to places like Australia and Canada.
Interesting. Well, thank you so much, Bhagyesh, for your time here and giving a synopsis of the Asian economy and the natural resources sector. If you do want to get in touch with Bhagyesh, you can reach him at bromiuscapital.com. I will be putting the information up, and he'll be more than willing to answer any questions and give you a very in-depth insight into the Asian economy and just the natural resources sector, given their extensive experience of over 25 years in the business. Bhagyesh, thanks again.
Thank you, Sunny. Pleasure to talk to you again. All the best.
Okay, thank you.